We're in a new financial system, y'all. It is time to wake up and realize that these digital assets have the ability to literally free us from the financial slavery that we've been designed to believe exists all of our lives. And each transaction is going to earn these institutions Canton coin. 26 tokenization super cycle set to drive crypto's next leg higher in 2026.
And I feel like that's the place where we are now, where we are seeing institutions really having to now do the very difficult and complicated work of actually really integrating these systems into their very long-standing systems. And so that's both a challenge and an opportunity to bring these new use cases to these institutions. But of course, there's a lot to figure out.
Hold on. I'm going to run that back because this is coming from an industry leading expert at the Linux Foundation. And this is only from like a couple of days ago. And listen to what she just said here. Pretty sure that's pretty damn important considering the hype that we've seen in this space and whatnot, and how she just pretty much confirmed like we're still in this integral phase where banks are trying to figure things out. Hold on, real quick. Take a second and listen to what she just said. Let's run that back.
And as a sort of neutral convener that brings together people to work and build where there can be shared infrastructure and shared benefit from that. Yeah, I think building on what Georg said about sort of the evolution here. I think everyone's been doing what they can, especially those who are at the forefront of being on top of new innovations within their constraints. And we've been supporting enterprise institutions in doing that because, like Georg said, there were constraints, regulatory constraints, scalability, privacy constraints, in which many organizations just couldn't do and leverage the technology for these use cases with the public and permissionless options. And so we've seen a lot of this experimentation happen within various institutions, both within internally or in a small or relatively small consortium, and I think that's been very helpful in order to prepare all these banks, whether they be private or public sector, to prepare them for this next stage that we're in now that the regulatory landscape is catching up and laying down a lot of the possibilities for these things to not be experimentations that are happening parallel to existing infrastructure, but actually start to build production systems, operate production systems that integrate with existing infrastructure. And I feel like that's the place where we are now, where we are seeing institutions really having to now do the very difficult and complicated work of actually really integrating these systems into their very long-standing systems. And so that's both a challenge and an opportunity to bring these new use cases to these institutions. But of course, there's a lot to figure out. Interoperability has been something that our community has been working on for a long time. We have a code project called Hyperledger Cacti and Smoot, which allow for integration between different distributed ledgers. We also see privacy coming up as more and more of a focus, because now we're actually dealing with real transactions, real data. And so there's a lot of different technologies in the space that are being explored, different flavors of zero knowledge. In our community, we have a new project that we that just graduated called Paladin, which is this composable framework for privacy on EVM. And so I think that we have been creating this foundation of the various tools and are seeing these networks expand into these multi-stakeholder regulated layer one models, where we need to move towards actually building an infrastructure where we can not only take advantage of digitizing or creating digital assets with this technology, but also the new possibilities that it offers as well. And so I think that's really where you're seeing this evolution into these RL1s, although some have been operating for a while, right? We have DTCC has had their Project Ion for several years now, Finality as well, Euroclear. The Japan Securities Clearing Corporation has also had several commodities listed and are doing real transactions with that as well. So this has been happening, but I think what we're seeing right now is with the shift in the regulatory clarity and frameworks, both in the U.S. and Europe, and the perhaps pressure of competition from stable coins, we see more of a push into getting these consortia together and creating this infrastructure that can allow us to operate globally.
That was a huge mouthful, but I like listening to people like that. That lady comes directly from the Linux Foundation. Let me go back and see what her credentials were. What's her name? Karen. Okay, she is the Senior Director of Ecosystem and Strategic Initiatives at the Linux Foundation. And, she's just a month ago. This is from December 4th, 2025, talking about how banks are just now in this phase where they're starting to really integrate all this stuff into the core banking infrastructure. And so I like playing these video clips because, you have all these opinions and theories fluctuating around on the internet from the retail side of things. But like what you don't see is the people that actually have credentials in this space floating those ideas around. And instead, the people that actually have credentials in this space are the ones telling you, like, it's not really quite time yet. We're definitely at that tipping point, and we're definitely starting to see scaled adoption in a much better regulatory environment. But banks are still trying to figure out where all of this fits in. So I like hearing things like that because it really brings us back down to reality with all these high price predictions that get thrown around on whatever project you're interested in. And it gets you to realize, like, this is a long term game, right? This is not some overnight quick fix, moonshot, freaking, overnight lottery ticket. This is the transformation of the financial ecosystem. And if you understand that, then you should be watching panel discussions like this that go relatively unnoticed. I mean, this is literally from the Digital Euro Association. You would think that a video breakdown like this, a podcast, would have so many more views, but bro, this only has 25 freaking views.
25 views. Oh man. This is the stuff that matters right here. Stuff like this.
Yeah, which is of course why the vast majority of people that hear this for the first time, and they'll hear me say something like, yeah, it's not time for the moonshot yet. And they'll be like, oh, you're wrong. And I'm
yeah.
I'm like, okay, dude, whatever, keep listening to Twitter people on Twitter, whatever, and stop listening to the people that actually work at these foundations, like the freaking Linux Foundation that literally governs every major organization that you use and have in your household products and like everything that you own. Linux Foundation. Okay.
Damn.
Yeah,
that's major.
Every store you go to, every piece of clothing you wear, everything. Linux Foundation,
Wow.
So you could choose to listen to this lady or not. But anyways, I thought that this video breakdown, it's pretty lengthy. I don't want to finish the whole thing. We don't have time for it today, but this is the regulator layer 1 building the digital foundation of finance shared in the private CYPRX Discord stream that took place live on December 4th. And it's got individual gentleman from the Canton Foundation. Who is he? Give me a second. He is the George Schneider, the global head of RWA at Canton Network. So I'll probably finish listening to that maybe after this and let it play once we're done our talking spiel. But let's dive into today's video breakdown and just get some stuff out of the way. So the reason why I like that too is because, we have Yuval Ruse here from just a couple of weeks ago going on to talk about how the Linux Foundation chose the Canton network. Out of all the blockchains out there, they chose the Canton network, right? So this is from a couple of weeks ago. I don't remember the particular date, but just listen to Yuval Ruz say this real fast.
And we wanted to make sure that everybody understand that at Digital Asset, we take these type of things very seriously. So the other thing that was an amazing surprise is that we approached Linux, and we told Linux that we would want them to be the governing body of Canton, and they told us that they haven't agreed to talk to any blockchain project. They have Hyperledger that sits under Linux, but the parent organization never agreed. They said everything can go to Hyperledger, but we are not touching these things. And about almost 2 months ago now, they gave us a green light to form a new project under Linux, and we're hoping within the next few weeks to kind of officially kick off the foundation, and Linux will be the governing body for Canton.
Wow.
So yeah, bro, Linux has been the overseer of, foundations, but never an actual governing body of a blockchain, and they chose Canton for the first time.
That's massive. That's massive.
It is pretty nuts. It's very interesting to say the least. First off, guys and gals, welcome back to another Well 28 Club Podcast Friday episode. We've been covering deep research on Canton. I don't think that we're going to have time to get to some of the XRP stuff that I have today, because I really only have an hour. I have like 50 tabs open today. Maybe we will, maybe we won't. I'm going to cover Canton first, and then if we have time, if we don't reach an hour by then, which we're already going on 30 minutes, we'll get into some XRP stuff. But nonetheless, just understand first before we dive in, it's so sickening seeing people in the comments think that here in the Well 28 Club we're maxis, or that we're bandwagoning a project, or any of those things. We're so diversified in this community. We don't gravitate towards any one project. We gravitate towards research. We gravitate towards things that are happening in this space that we believe people should be paying attention to, and you guys can choose what to do with that information. So nothing that we constitute here is financial advice. We're not telling you guys to go out there and invest in Canton coin, nor are we telling you guys that Canton coin is the chosen one by any means necessary, nor XRP or Metal or XPR or anything like that. We don't have those types of opinions here. We just do research. All right. So we hope that the real people out there that are listening and tuning into these calls actually appreciate that type of research and that value, instead of all the hype opinionated bullcrap that exists out there on the internet, where people just throw ridiculous theories and price predictions out to you guys and distract you and keep you diluted into this lottery fixed mindset. Here in this community, in the CYPRX Well 28 Club, we just do research. Okay. So with that being said, let's kick it off, as they were talking about tokenization, and CoinDesk just dropped this article a couple days ago, published January 7, 2026. Tokenization super cycle set to drive crypto's next leg higher in 2026, Bernstein says. And this goes on to read, Wall Street broker Bernstein said 2026 is likely to mark the start of a tokenization supercycle, with digital assets having probably bottomed after a weak end to 2025, making market dips an opportunity to add exposure to crypto-linked stocks. The broker says sentiment weakened late last year, but underlying fundamentals remain intact. Analysts led by Gautam Chujani wrote in a Tuesday report. So that was just interesting to see, because there's a lot of fear-based sentiment right now, and we know the long-term trajectory of this space. Anybody that has done the research, put in the elbow grease, and this is not your first rodeo, knows that these discounted opportunities that we're seeing across the board in multiple different altcoins is nothing but that, an opportunity to fill the bag on blue chip digital assets that are actually solving real world use cases and real world problems. And I couldn't support that enough. Now, we've seen so many recent developments in regards to the Canton network lately, and because a lot of people have never heard about the Canton network, nor do they know that it's existed since back in the early days of ETH, right? Back in 2014 era, they think that it's just this random blockchain that popped up out of nowhere, but it's actually not, and it's been around for quite some time. They just actually launched their coin recently, which is why there's a lot of hype around it. But the blockchain itself and the developers and the team behind it have been in this space for literally over 10 years, over a decade. And we're starting to really see those developments kick in. This was posted from Payment Expert just a day ago. Since we're on the topic of tokenization, it says, yesterday, Lloyds Bank Group became the first, I repeat, the first UK bank to settle a tokenized sterling deposit. The transaction was settled between Lloyds Bank Corporate Markets and London-based digital asset company Archax, leveraging the Canton Network blockchain. Global banks have placed increasing focus on tokenized deposits as opposed to stablecoins, with JP Morgan and Citi leading the charge in the US, while HSBC has developed use cases for multi-currency cross-border settlement. Now, as we continue to progress, there was another announcement just today from Canton, and it talks about how BNY has launched tokenized deposits for institutional clients, enabling bank deposits to move on chain, improving settlement efficiency and liquidity management. And then Canton Network said here, it says this reflects the direction Canton was built for: privacy enabled institution ready infrastructure at scale. I really like that key vocabulary word, privacy enabled. We'll get into that in just a second. So, reading this piece here from January 9th, 2026, it says BNY has introduced tokenized deposit capabilities for institutional clients, enabling client deposit balances to be mirrored as on chain digital book entries. The system runs on a private permission blockchain and is governed by the bank's established risk compliance and control frameworks, maintaining existing regulatory and reporting standards. Clients' balances will continue to be recorded on BNY's traditional systems. The initial launch will focus on collateral and margin frameworks with tokenized deposits designed to reduce settlement friction, improve liquidity management, and enable programmable cash movements. Then down here, it goes on to talk about something that Yuval said here. It says, commenting on the launch, Yuval Ruse, co-founder and CEO of Digital Asset, said, "We welcome the opportunity to work with BNY as they advance a practical institution-ready approach to tokenized deposits, bringing deposits and balances on-chain, making asset mobilization more efficient and unlocking liquidity across workflows." Then it says, this direction aligns closely with our strategy for the Canton Network, supporting privacy-enabled on-chain infrastructure and solutions that help regulated institutions coordinate and transact in real time while maintaining the controls, governance, and trust that underpin the global financial markets. Now, why I like this is because it goes on to this whole notion behind this privacy ideology. And so before we get into some more groundbreaking fundamentals, like the Temple Digital Group launching a private institutional trading platform on the Canton Network, which is huge. I'll come back to this in just a second. I want you guys to remember first that NASDAQ also is partnered with the Canton Network. And if we come over here to this December 16th FT Partners tokenization of real world assets, again, the title and topic of tokenization, mind you, what Bernstein's just said here in this CoinDesk article, that tokenization is going to take 2026 by storm, right? Well, listen to what the NASDAQ CEO here, you can see Adina Friedman, chair and CEO of NASDAQ, says and talks about in regards to privacy and how these institutions are going to need this privacy in order to even operate at scale in these markets. Take a second here and listen to what she says.
So in the equities world, as liquid and transparent as we are, we do not give up who the traders are unless they choose to, right? So that is a really, really important part of the entire making the markets as liquid and as transparent as they are. So there's obviously instant price discovery and all of that. There's depth of book, all of that. But it's, if you choose to put your name behind a quote, you can, but most choose to be anonymous, even on the quote, even on the order. But then on the trade, you think about the level of privacy that institutional investors seek. It is pretty extreme. I mean, their only obligation is to disclose their positions 45 days after the end of the quarter. So while I think that should be brought up closer to the trade, I don't think it should be revealed at the trade. I think you would disincentivize so much volume from coming in if they have to give up their strategies on a real-time basis. And so I think if you end up in an open blockchain that does not have privacy, there will be a privacy layer that's introduced, and that just creates friction. So if you have it built into the actual blockchain technology, that's the elegant way to make it so that you retain the need for them to be able to execute their strategies successfully throughout the day, without a give up.
So long story short, she talks about the privacy feature being built into the blockchain and literally how it's going to be mandatory for these institutions in such a way, right? Because none of these institutions want to, make transparent their trades. It would literally create chaos in the markets if they did that. And what does digital asset Canton network offer? It offers the ability to embed privacy, and it comes with the blockchain features. Now, that's so important. And the reason why I really like this panel discussion, we played this, I believe, Aqua last week, right? Where the gentleman from Figures talks about how, what did he say specifically? He was talking about how banks are using DeFi.
Yeah, how basically the employees or I don't know if you'd call them employees, but the people that work for these institutions have been testing DeFi out. And remember, going back to our previous conversations back in beginning of 2000, I mean, I would even say 2024, right? We were like, where's all this money coming from? Because on DeFi Llama, I think the total value locked was a good amount. I don't want to throw out a number, but we were like, where's all this money coming from once it started to click? And then we were like, man, maybe it's the institution like private money. And he basically tells us that that's what they were doing, at least from these group of individuals, right? So
yeah, asking the question, like, where are these these wallets that have, $10 million sitting in a stablecoin liquidity pool? Like, that's not just your average retail investor on working your 9 to 5 job with 10 milli sitting in the liquidity pool. That's some institutional, worker, somebody that understands the game, that has that amount of capital, that's sitting there testing these things out. And this guy proves it right here. Take a second and listen to this, y'all.
Sometimes, these things can feel like side projects inside of these larger institutions, and the concept of kind of where this is headed as being a side project feels like very much off the table right now.
Well, I was sitting at a lunch with the head of equities at one of the big sell side banks, and they pulled out their wallet and showed me their Phantom wallet and their MetaMask wallet and all the stuff they were doing in DeFi, and they understood it inside and out, and they understood what the value prop was. It's not trading stock 24/7. It's the DeFi collateral aspect.
Bro, I would even say this just the level of maturity to have 10 million in stable position, right? Give any degen $10 million and it's going to be in meme coins, blue chips, what they think are blue chips, right? So the fact that it's in stable coins speaks loudly as well.
Now, we're going to do something here for you guys that I guarantee you no other influencer group that has covered this or will cover this groundbreaking fundamental piece is going to show you all physical proof. How many times you've been following these podcasts and you're even a part of the Well 28 Club? This is going to blow your mind. Have we been screaming at the top of our lungs that these institutions will be, for a fact, earning rewards and yield on their digital assets? And that is the future. Get involved, learn how to do it, because that's what's about to happen, right? Well, you guys just heard that gentleman from Figure talk about how he sat and ate lunch with a sell side bank, and he showed him his wallet, and they were talking about DeFi on Phantom wallet and MetaMask. Like, if that's not confirmation enough, check this out. So yesterday, Temple Digital Group launched a private institutional trading platform built on the Canton network, offering continuous 24/7 trading of digital assets using a central limit order book and non-custodial market structure. Now, this is great, but what's so crazy about this is that these institutions that use this trading platform, Temple Digital Group, are about to be earning rewards in Canton for using the freaking platform, y'all. Check this out. So let's dive into this. This is from Cointelegraph. Temple Digital Group has launched a private, and remember, we heard the NASDAQ CEO sitting on a panel with Yuval Ruz talk about how important privacy is and the privacy aspect of trading. Okay, and mind you, this just launched on Canton. Temple Digital Group has launched a private institutional trading platform built on Canton Network, offering continuous 24/7 trading of digital assets using a central limit order book and non-custodial market structure. According to an announcement shared with Cointelegraph on Thursday, the platform supports trading in cryptocurrencies and stablecoins and is designed to allow institutions to transact with approved counterparties while maintaining privacy and regulatory oversight, with participants retaining custody of assets rather than relying on a central intermediary. The system is built around price time priority central limit order books with sub-second matching and includes execution monitoring and transaction cost analysis tools intended for institutional trading desks, the company said. So again, this is for institutional clients. This is not for your average retail investor. All right. It says the platform, to confirm this even more, is live and is onboarding institutional users, including the likes of asset managers, market makers, and financial institutions, with support for tokenized equities and commodities planned for 2026. So this is confirming what this platform is designed for: market makers, financial institutions, and asset managers. So let me rest my case. If we come over here and we go to the Temple Digital Group website and LinkedIn profile, this blew my freaking mind yesterday, because all day yesterday on their LinkedIn profile, they were posting about this. Canton Coin is now available on Temple. This is from 2 hours ago, right? And then if we come over here in the CYPRX research channel, what did we find? I'm going to play this little tiny video snippet for you guys. And I asked the same question on the Zoom call, on the private Zoom call yesterday that we had with the community. Do you see what they say here in this little 21-second video? So I'm going to play it. I'm going to mute it though, because I don't want to get freaking copyright infringement for the little tiny music that they have in the background. But this is directly from Temple Trading Digital Group, and we already know who's going to be using this platform. Okay. And look at what it says. So just take a second and watch this. So it's just doing a quick overview of what the platform looks like a little sneak peek, right? Boom, right there. Did you see it? It's quick and it dissipates and goes away real fast. But look at what it says here, y'all. Each transaction is going to earn these institutions Canton Coin. Y'all, you see that right there? Now, you would only know that this is going to happen if you were to watch this 21-second video and pause it right here where I'm pausing it for you guys. But it says it right there. Every transaction will automatically earn you Canton Coin. Okay? Now, let's just take a look at who developed this Temple platform, because the team is right here. So here's their website, building financial infrastructure for the next generation of capital markets. You got their whole team here, all their LinkedIn profiles. Check out. You got the CEO of Temple. He is also currently the CEO of this organization called Mintify, that currently right now has over 500,000 plus users and currently actively has over $200 million in trading volume. Then you have people like this guy over here. I want to show you guys this dude and his credentials. Where is he at? Right here. You got this guy, head of compliance at Temple Digital Group. Okay. Manfred B. And if you scroll right down here to his past credentials, he was the FinCrime Transformation Chief Compliance Officer at BVNK. Okay. What is BVNK, y'all? If you come over to the BVNK website, BVNK is a registered money service business with the U.S. Financial Crimes Enforcement Network and licensed in various states as a money transmitter or equivalent. And a dude that used to work here is now working at Temple, and Temple just decided to choose Canton Network to launch on. So you guys kind of get my gist of like how these people with valid credentials are choosing these blockchain networks, and then people on Twitter are like calling them a scam. Do you think that a guy that used to work at BVNK, that is a registered money service business with the U.S. Financial Crimes Enforcement Network, would have chosen the Canton Network if it was a scam? Are you seeing the pieces, the puzzle I'm putting together for you guys here? Right? Go ahead, Aqua, if you have anything real quick.
No, I mean, it's so crazy how transparent it is as well. Like if you just put in a little elbow grease and do the research, I mean, this is this is undeniable proof right here. You know what I mean?
So to wrap this up, the reason why we wanted to bring this to y'all's attention is we're proving to you guys that right now DeFi offers a what? We've been saying it for some time, a level playing field where these institutions are going to be earning rewards on their digital assets, and so can we. So I've now showed you guys how institutions are about to be earning rewards in Canton coin. Well, if you guys haven't seen already what's going on with the Braun wallet and Canton coin, right now we can earn Canton coin in the Braun wallet. So I'm not going to go over this in detail unless you want to today, Aqua, but maybe talk on this a little bit. But right now, there are different reward features and tiers in the Braun wallet, which is a newly launched wallet by the CEO or ex-CEO thereof of Copper, who created this wallet, where they are also a super validator on the Canton network and participate in the rewards mechanisms, distributing rewards to people that come and house their Canton in the Braun wallet. And we've been using this for quite some time now in the CYPRX community, and we're getting daily rewards just like these institutions are about to be able to do. I just showed you guys over on Temple, right? Which is an institutional grade trading platform for market makers and institutions alike.
Keep in mind, like Cypress just said, Copper is one of the super validators for Canton Network. Yeah, Dimitri is still basically he's a huge investor still for Copper. And this guy is no small fry. Like I proved on our Zoom call yesterday, I can just share my screen actually real quick so I could show you guys who this man is and what his net worth is. But it's pretty crazy. And keep in mind, this was back from 2023, I believe. So hold on, let's see here. So yeah, this is the wealthiest Brits in tech, right? We got our guy Richard Branson right there. But number 36 on this list is Dmitry Tokarev, Copper. 264 million is his net worth. And again, this is back in 2023, so it could be much more than that, right?
Oh yeah, bro, his net worth is way higher than 223 right now.
Yeah.
Yeah, that's phenomenal. It just goes to show that these people are building things in a space that actually matter. And a lot of people, if you're new to this whole entire thing that we're talking about right now, don't just go and jump in. This is the type of stuff that we talk about in the Well 28 Club on a consistent weekly basis all the time, like earning rewards, getting our digital assets working for us. I suggest that you guys take some time if you're interested in these types of things and just start reading, start reading documents, start reading websites, start reading information on this, because it's all there. It'll answer all your questions. A lot of people will be like, well, where do the rewards come from? Are you even allowed to do this? Is this even possible? How is it all possible? What are the reward distributions like? Do the rewards fluctuate? Like all the questions that you could possibly have outside of tapping into the Well 28 Club, where we discuss these things on weekly Zoom calls with the private community members. It's all there for you. If you just start to lock in and tap into a community that points this stuff out, then you can go easily find it, right? So maybe I'll read this and wrap it up here, because there were some questions on how is this even possible? Well, let's dive into this. These are the documents from Braun, and it talks about how all of this is possible and kind of like what it is about. So again, I'm reading this because I'm trying to show you guys that, and me and Aqua have been trying to show you guys for the longest time, why it's so important that right now you stop focused on this price appreciation theoretical bullshit and you start to focus on cash flow. Cash flow is king. None of the institutions, if you guys actually listen to the panel discussions that stream constantly week after week after week, are ever focused on price appreciation. What are they focused on? Collateral, tokenization, posting digital assets, utilizing them to earn rewards and build treasury portfolios, and then have those treasury portfolios inside staking mechanisms and then earning yield on those and just generating more income every single month. So you would start to think like that would change the retail perspective into cash flow is king, right? But again, because most retail traders are manipulated to believe that we're in this cycle that we're just going to see high-end freaking prices out of nowhere, they're not focused on these things. I encourage you guys to put that stuff aside and just learn how to get your digital assets working for you. Even if it's $1 a day can snowball into eventually $10 a day. if you know how to do it properly, right? That $10 a day again, therefore, after can snowball into 20 bucks a day and so on and so forth. So reading this is from the Braun Canton Rewards Program. And it says Canton coin. First off, this is not available for individuals in the United Kingdom. So sorry for anybody that's in the UK. That sucks. Canton coin is the native utility token of the Canton network, an infrastructure designed to bring real-world asset tokenization onto always on-chain capital markets. Canton aims to increase the adoption of Canton coin, and one of the ways the network encourages participation is by providing rewards. When paired with Braun, the Braun wallet enables users to participate in rewards programmed by holding both Canton coin and Braun tokens. By activating Canton and the Braun desktop app and meeting the required holding thresholds, users become eligible to share daily rewards that reflect the Canton network's utility-driven tokenomics and its ecosystem participants and contributions. Now, depending on the activity on the Canton network may mint new Canton tokens as part of its protocol level tokenomics and distribute them to eligible participants who generate activity on the network. The size of the rewards and the rules for their distribution among participants are determined by the Canton Foundation. Braun has no influence over this process. Braun does not guarantee any specific level of rewards and is not responsible for the amount, timing, or continuation of rewards distributed by the Canton Foundation. As it goes on to continue, it says, to join the Canton and Braun Rewards program, you must have an active Braun plan by holding Braun or a fiat subscription. Activate Canton, available only in the desktop app. Hold both Braun and Canton tokens in your Braun wallet. And once you have enough Braun and Canton coins, you can then join the rewards program directly from the Braun wallet interface. Here are the available tiers. Talks about holding 10,000 of both, 100,000 of both, 500,000 of both, and $1 million. Now we have different community members that have all kinds of different tiers. I personally, just to be transparent, am currently in the 100K tier. So going back here, you guys can see the recent rewards. Even just today, I was deposited $82 for participating in this rewards program. So here's all the rewards that have been distributed. And I mean, you could see it deposits every single day. Rewards, $9, $9, $9, $10, $10, $10, $12, $12, $10, $11, $9, and it goes on, right? So, you know, here in the Wealth 28 Club, we're just all about passive income and cash flow. And what you decide to do with this passive income and cash flow is up to you, of course. But nonetheless, the goal is cash flow. $10 a day, every single day, turns into $70 a week. And $70 a week could literally pay your freaking water bill. Literally $70 a week times 4 is a couple $100 a month. And guess what? There's your electric bill or your gas bill or part of your rent. And so the idea is not to just hold these digital assets, collect dust, and freaking hope for moon boy prices. No, we are in a new financial system, y'all. It is time to wake up and realize that these digital assets have the ability to literally free us from the financial slavery that we've been designed to believe exists all of our lives. And if you have the mentality to overcome and push past the curtains that exist in the general and average retail hypey space that just deliver you all this constant nonsensical bullshit of price appreciation all the time, which is going to be great one day. But as we heard at the very beginning of this call, the Canton or the Linux Foundation lady literally said, hey, y'all, we're still in the process of banks figuring out how to integrate all this into their core infrastructure. And it's not yet time. It's definitely the tipping point, and we're starting to really see it transpire. And in 2026, we're definitely going to see huge developments, but calm, right? Calm. Everybody relax. It's not fully time yet. That time is coming. We are definitely well on our way to that 2030 agenda. But what are you going to do now between today and then to really start to come out on top?